Do I pay capital gains tax when selling my property in Greece? This is a very common question asked by property sellers and buyers. The short and practical answer is that in a normal private property sale, you do not pay capital gains tax in Greece, even if you sell the property at a higher price than you bought it. Hi, I am Dee from Alexis at Home in Greece, a real estate company with 35 years of experience in the Greek property market. In this video, we will explain what actually applies today with this tax, why the confusion exists, and when tax may still apply, in clear and simple terms. So let's start with an example. If you bought a property in Greece in 2019 for 300,000 euros and you sold it in 2026 for 400,000 euros, no capital gains tax is due, provided it is a standard private transaction. This often surprises foreign owners because in many other countries, capital gains tax is unavoidable. So why is Greece different? The confusing part is that capital gains tax does exist, but only on paper. In 2013, during the Greek financial crisis, Greece introduced a capital gains tax law as part of a broader tax reform. The idea was simple. If someone sold property at a profit, the gain would be taxed, with certain exemptions and reductions based on how long the property was held. However, many properties in Greece were inherited, very old, or built gradually over decades. In many cases, there was no clear acquisition price, no invoices, or no reliable documentation. And because of this, notaries who were responsible for applying the tax faced serious legal and practical problems. And as a result, the capital gains tax for private individuals was suspended in 2015, and that suspension has been extended repeatedly ever since. So today, the situation is simple. For private individuals, capital gains tax on real estate sales is currently suspended until at least the end of 2026. The law still exists, but it is effectively frozen, given that Greece is no longer in crisis mode and the tax proved unworkable. There is little political pressure to reintroduce it in its original form. However, this does not mean that all property profits are always tax-free. Greek tax authorities can step in when a transaction appears to be business activity, even if it's conducted by a private person. This usually happens in two cases. First, repeated transactions. If someone buys and sells multiple properties within a short period, that is 3 or more transactions within 2 years, the authorities may classify this as a professional activity. Second, quick resale for profit. If someone buys or builds a property and resells it quickly without actually holding or using it, the intention may be considered speculative. In these cases, the profit can be taxed as business income, which is currently taxed at 22%, and in some situations, VAT may also apply. For those wondering what applies to companies and legal entities, the situation is different. Companies do not benefit from the suspension in the same way that individuals do. Profits from property sales are generally taxed as part of corporate income under standard corporate tax rules. And this is why the distinction between private ownership and business activity is so important when structuring a purchase. So to summarize, private individuals do not pay capital gains tax on standard property sales in Greece. The capital gains tax law exists but has been suspended for over a decade. Tax may apply only when a transaction is treated as a business activity. It's always wise to understand how the rules apply to your specific situation and consult an expert to guide you safely and answer your questions. If you found this video helpful, don't forget to like, subscribe for more clear and practical advice on Greek real estate.